What if you are spending less than 85% towards the objects of the trust in a particular financial year? Do we have any remedy? Yes, we have remedy.
Hello friends, welcome to my channel, Net Charity. In the education series, today, CA Shri Ravi Gupta, eminent speaker on charitable organization gives his insight on the topic, how to save tax and penalty on unspent donation in the financial year for the registered trust under Section 12A(b) of Income Tax Act for seeking exemption. Today's topic is going to be super informative. Kindly like, share and subscribe my channel. This will be a gratitude towards the speaker. Let's start.
What if you are spending less than 85% towards the objects of the trust in a particular financial year? Do we have any remedy? Yes, we have remedy. We have a remedy in the form of Form 9A. We can file Form number 9A and we can claim that particular amount as deemed application for that particular financial year, which is to be spent in the subsequent financial year. Let me take a practical example. Suppose if you are receiving some money in the month of March or in the end of March for a project which is to be executed in the subsequent financial year. Now, what will happen is you have accumulated the money, you have a surplus, you will end up paying taxes, but department has provided form number 9A. You can file form number 9A. That particular amount will be treated as deemed application for that particular financial year, and the department will allow you to spend that money in the subsequent financial year. Mind well, the department does not scrutinize the form number 9A. It is just a sort of an intimation to the income tax department. That is one situation. There may be another situations where you are planning to execute a big project, which may run over a period of say 2 years, 3 years, 4 years, 5 years. So in that circumstance also you can file form number 10, which is designated by section 11(2) of the Income Tax Act as of now. You can file form number 10. You can accumulate that money for a period of 5 years. But at the end of 5 years, if the amount is left unspent, that will be taxed as per the provisions of the Act. And the provisions of the Act are saying that you will be taxed at maximum marginal rate. So these are the advantages when you register yourself under Section 12A. One thing is you can accumulate 15%. The other thing is you have an option of form number 9A. The third thing is you have an option of filing form number 10. And all the participants on board may be very much aware that capital expenditure spent towards the objects of the trust can be directly debited to the income and expenditure account, which is also a big advantage as far as charitable trusts and NGOs are concerned, provided they are registered with 12A of the Income Tax Act. But I would like to stress upon the timeline for form number 10, which is 31st of August. Last to last year, this particular timeline was introduced. Then in the last year, there was a circular saying that even if you are filing form number 10 before filing the return, it is fine. But there was no specificity as to whether this is for a particular year, this particular year, or for all the coming years. But what I have understood in the last year also, the department was not keen that 31st August should be the date of filing. We have been filing before the due date. We have tried to abide by 31st August, but then too, if it was not possible, suppose some client is coming late, some figures are being finalized later on, we have filed the returns after form number 10 and form number 9 after 31st August also. But department has not penalized us, provided it is filed, the return is filed before 31st of October. So this is about the timelines. Now let's see what circulars we get for this particular financial year. That has to be seen. 11.3 talks about, 11.2 talks about the accumulation for a period of 5 years. 11.3 talks about, when you violate section 11.2, then we have 3A also, whereby at times it so happens that it becomes difficult for an organization to spend money on the object for which the amount has been accumulated. So this is the time. Suppose, let us take the example of COVID. When all of us were facing COVID, it was difficult to meet the objects of the trust. So 11.3A comes to your rescue. In such circumstances, you can go to the income tax department. You can write to the assessing officer saying that this amount was accumulated for so and so purpose, but due to so and so circumstances which are unavoidable, we are unable to spend this amount on the objects for which the amount is accumulated. So allow us to spend the amount on the objects as per the constitutional document. Whatever other objects we have covered in our constitutional document, please allow us to spend the money on that. So the department, after verifying the merits of the case, will allow you to spend the money on the other objects, provided it is covered by the constitution.
Further information will be covered in part 2 of the education series. If you like the information, kindly like, share and subscribe. This will be a gratitude towards the speaker. Thank you.